Quick futures update. I know I'm a bit early for it, but I'm just going to try to get things going so that we can get it all out of the way and get you guys with some trade ideas and some things to watch coming into the new futures session. All right, so let's go ahead and jump into it. There is some news coming up today. We've got non-farm payroll happening. That'll be at 7:30 Central Time, 8:30 Eastern. So still well in advance of obviously the market, the regular trading hours opening, starting, but it's something to be aware of that what comes out of that report could certainly be a catalyst in the market overall. Last night we saw some, I shouldn't say last night, yesterday afternoon, we saw some crazy things going on. Let me just pull up the right chart here. I think I need to be on this one. Yep, there we go. Big sell-off in the S&P at the end of the day yesterday, driven by vaccine news, which honestly, biggest farce ever. Come on, who the hell doesn't know? Who cares if the vaccine's coming out? Who cares if the vaccine's delayed? No one's gonna take the shit anyway, right? Sorry for cursing, but I mean, come on. Drug companies work for years and years to get a vaccine out and get it right. But we're gonna develop one in a few months and then shoot that shit in our bodies? Really? Every nurse I've talked to is like, I'm not taking that. Anyway, totally off the rails on that. Let's just talk about what's going on here. We're still on an upward trend. The bias on the 4 hours long, the bias on the 30 minutes long, unless we have something major happen with the non-farm payroll news, some big delta between what the expectation was or is and what the actual came out as, no reason that we wouldn't just continue with our current trend. And so what we'll be doing is it comes back to don't fight the trend, guys. Don't fight the trend. We're not here to try to call tops. There are times when we might want to look at counter trend trades, but for the most part, try and call tops and bottoms just a fool's errand. It really is. Just follow the trend till the trend isn't there anymore, and then we can make decisions about what the new course of action is. So right now we're looking for long trades. What that looks like if we're utilizing the BTX method, we want to see price pull back. We want to see price making lower highs and lower lows, lower highs and lower lows, and then we play a breakout of a previously closed lower high. Yesterday we had that. We had a price made a lower high and a much lower low. It broke out, but it didn't give us a chance to go anywhere. It didn't run. It did take off our risk. Our initial risk on this breakout was way down here, but it did move the risk up on the close of that candle. So only a couple of points here to be lost in that trade, which it all shakes out in the long run as long as we're following our trading plan. So we'd like to see price pull back, lower highs and lower lows, lower highs, lower lows, and then we'll play a breakout of that previously closed lower high. If you're looking just at straight breakout areas, if you're just a person that doesn't want to mess with that and just want to be able to park a trade and say, hey, if it breaks this, I'm in. If it doesn't break it, I'm out. Fine. You could look at this 36. Really, probably 3680 is the real top up here. And probably safest to play your breakouts up there. If you look at 3680, if we break above that, then we'd be looking for long opportunities. If we really start pulling back and price just starts moving hard against us, there's a lot of room here to still look at bounces back into the long direction. And probably the safest area would be around this 3665 area. If we pull back down that low, you could look at long trades on a bounce off of 3665. That one's a little different trading style. It's not what we do with the BTX method. The BTX method, we want to let it pull back and then break back above previously closed candles, kind of confirming that momentum back in the direction of the current market bias, right? But there are people that like to play bounces. It's tougher from a psychological standpoint because you have to be able to take that buy in the face of a big red candle. But for folks that like bounce trades, 3665 area, if we break down below that today, if price just really is moving heavy and we break, and I guess a lot of that's going to depend on what happens with the employment reporting and how the market reacts to the employment reporting. But if there's a big sell-off there and we start coming down below, we break down below 36.65, even 36.60, you may just kind of hang it up for the day and say, I'm out. Crude, what's happening in crude? We've got a long bias still, 30 minutes long, 4 hours long. We definitely have a long bias on crude. What that would look like is letting price pull back like this, continue to pull back, and then play a breakout as price moves back in the direction of the current market bias. So we do need to see things start to go back in the direction of the current trend. If things just keep falling, then we don't worry about it. We don't take a trade. Easy peasy, right? Gold is a mixed bias. Gold over here, we've got a short bias on the 4 hour, but a long bias on the 30 minute. So for gold, we have a mixed bias. So that tells us, hey, for the BTX method, we just don't take any action at all. Now, when I see something doing this though, look at this channel that we're in on gold. I mean, we're in a pretty tight channel, really looking kind of at, call it 18, if you're going to go all the way down to 1840, it's a little bit low, but you can call it 1842 to really about 1847. We're in kind of a tight channel here. Not the BTX method, but if you certainly you could just look at playing breakouts of this channel here. And depending on how aggressive you are, you could say 1847, if I break that, I want to buy it. And 1842, if it breaks that, I want to sell it. If you want to really wait a little bit more to see if we get more of a bias, more of a real confirmation on that, you could look a little bit wider, look at above this top up here at like 1849 and look down below this bottom here at like 1841, 1840. But for those that are a little more aggressive, you could tighten that channel up right around, right through here, and look at breakouts there on gold. But that's not the BTX method. We're not, the BTX method says we need to wait for pullbacks, wait for market confirmation. It's going to be a while before we get that confirmation. If you can't wait and you got that itch, oh, I got to trade, I got to scratch that itch. Well, just a straight breakout of this channel is a great way to go. So there's some trade ideas and some trade opportunities for you. The biggest thing, guys, though, is I know I've given you some different ideas and different ways of looking at the market. Really, in order to achieve consistency and success, you need to pick one. Pick one and trade that way, and just do it the same way every time, every day. That's where you're going to get an edge. Is consistency in your execution is going to give you that edge over time. Jumping around, looking at one thing one day, one thing another day, unless you've got a really good reason for doing it, like we just talked about in gold, unless you've got a really good reason for doing it, it can get dangerous. You've got to have quantifiable reasons for everything that we do in trading, and not something that you're going to set up ahead of the market and say, here's what I'm going to do. Here's my plan for the day. Here's my general trading plan. And here's kind of my auxiliary plan if things, don't quite line up, and plan it out and then take an action. And if things don't come into that, don't meet all the criteria of your trading plan, then you don't trade. You've got to be patient. Patient traders see the success, right? That's what it comes from, is being patient. For those of us that are impatient and are kind of cavalier without any real plan, those traders are the ones that give their money to the patient traders over the long run, right? I mean, you're gonna get lucky. I mean, I think you could close your eyes and walk up to the plate and swing and eventually get a hit if you took enough swings. But do you want to be that guy when you're trading and you're putting real money on the line? Probably not. Anyway, I'm going down a rabbit hole, going down a tangent. Definitely went way over the time of what I had planned to do for this thing this morning. So we got some trade ideas out there on S&P. We've got some trade ideas for crude, and we've got some trade ideas for gold. So that's it. I'm gonna leave it here. Let you guys get on with your trading day. If anything, just again, trade safe. Trade your plan. If you don't have a plan, today is a great way to create one. Create one today. You got the whole weekend ahead of you to do some back testing on your plan once you create it, and then execute that same system, starting Monday. All right, or go through my training and use the BTX method. Super easy way to look at the market quantifiable reasons for doing what we do, and gives you long-term